This business has grown its revenue and profits well for the past decade at a compounded annual growth rate of more than 20% a year over the last 10 years. Hi there, welcome to the research series by MoneyWise Smart, where we discuss great growth companies to invest in and own for the long term. Before we start, please hit the like button below so that the YouTube algorithm can help more people like yourself to learn more about investing. Today, we are going to talk about an interesting company called Pax Global in China. Now, before we start, the standard disclaimer first. Whatever we are going to discuss today are by no means any investment recommendations and should be treated as for educational purposes only. Now, we have done a deep dive analysis into this company, and we have produced a slide deck of more than 110 slides. But today, we are just going to give you a very quick overview of the company and industry to let you know why we think this company is worth looking at. And if you are interested, you can find a more detailed analysis on the company in our research series. So Pax Global is actually a company that sells point of sales terminals. This is the type of terminals that you see in restaurants, in shops. Imagine when you go to have a dinner, or if you buy something from a shop in a shopping mall, and then when you are paying, you'll be presented with these POS terminals where you can pay using your cards, be it debit card, credit cards, or even on your phones. I'm pretty sure all of you have used this terminal before. And you might have seen the brands on those terminals. If you have noticed them, you'll probably come across brands like Verifone, Ingenico, which are pretty big players in this industry. Sometimes you might come across BBPOS or Pax Global. And then if you're in China, you might come across Newland Payment, which is pretty big there. So now you might be thinking, why are we looking at a company that actually manufactures these POS terminals? Are they a commodity? They look pretty much the same to all of us. So we'll be giving you some insights as to why we think it might be a commodity in some geographic areas or markets, but there are still potential in this industry. So if we look at this industry, it's actually dominated by 3 global players worldwide. As you can see in the chart here, which shows the market share in 2018 by the Nielsen reports based on the volume shipment of the POS. The top 3 players are Verifone, Ingenico, and Pax globally. And you can see here combined market share for the 3 of them are pretty high, about 50% in the US, same in Canada, even higher in Latin America and Europe, and then it's lower in the more emerging markets in Middle East, Africa, and APAC. And it's pretty concentrated, particularly in the top 2 players. For example, you see in the US, it's dominated by Verifone and Ingenico. Ingenico is very strong in Canada, while Pax Global is very strong in Latin America. And then Europe is also dominated by Ingenico. So you see such a big concentration in market share. And if POS is really a commodity, why is that? So why can a few players just dominate the whole market? Which means that there might be some interesting things going on behind. So some of the reasons why this market can actually be so concentrated is that, as contrary to a lot of us might be thinking about on first glance, there are actually quite some barriers of entry into this industry. The first being that there are strong regular scrutiny over these products, given that POS terminals are actually handling money. And when it comes to money, fraud can happen any day, anytime. So that's why technology and security are important. So the regulators are closely looking into this. And if you want to sell POS products in certain markets, particularly the developed markets, you need to obtain a lot of different certifications which can take between half a year to 1 year each, and they are not the same in each market. So as you enter in a new market, you need to get new certifications to prove that you can be providing the POS terminals that are secure in handling money. Next is also you need to establish strong relationships and trust with the acquirers, where the acquirers, which are the customers buying all these POS devices and then on-sell it to the merchants, is quite difficult to break the relationship that exists between the existing POS suppliers and those acquirers. Because imagine if you are the acquirer, you know that this product works, is of good quality, it is good in security terms, you won't want to try out a new supplier, particularly if that supplier doesn't have any branding, because the risk is so high if you start using the POS from this supplier and their security breach on payments front, then you could be potentially be faced with a huge liability. So there's some switching going on here. That's why it's hard for new players to penetrate, particularly those without any track record or branding. And third, you also need to put in a lot of investments and R&D in this business, as we'll talk about later. The existing players actually pump in a lot of money in R&D to keep innovating and make sure that they've got good products that offer good values and also are secure. And not only the money spent on developing products, you also need to spend money to establish the distribution channel to penetrate many markets in the world, and it takes time to build up branding. So you're burning a lot of money in the meantime. So this is our team. I'm Fan Liang on the right, and this is my partner, Rupam, on the left. I live in Melbourne, Australia, and Rupam lives in Singapore. We work very closely in analyzing good businesses like this, and we do deep dive analysis into the various aspects of the company, industry, and competition. We would like to invite you to join us in our Facebook group. The link is provided here, and a clickable link is also provided in the description below the video. So we keep discussing a lot of interesting businesses and investing concepts in the Facebook group, and we would like to invite you to come and join the discussions. Now that we have seen that this industry is actually not that commoditized, and there could be areas for strong players to get a quite return on capital from this industry, what do you think about? So is it worth looking at these industries overall? And we think the answer is yes, because there's strong tailwind. So we are in 2020 now, where you see COVID-19 pandemic happening all over the world. This has basically accelerated people's transition from cash payment to digital payments, which has been ongoing for a pretty long period of time, where people start using more e-payments like cards or even phones instead of cash. And it's happening in both the emerging markets and so also the developed markets. And the COVID-19 pandemic just speeds everything up. If we look at some market reports, they are projecting this industry, POS industry, to grow at about 15% compounded annual growth rate from 2019 to 2024. So that's a pretty strong growth. If these projections turns out to be right, as long as you keep your market share, you can basically grow at 15%, which is pretty good. And on top of that, this industry also has a long runway. So this chart here basically shows the number of POS per 1,000 population in different countries. The emerging countries are lower at about 15 POS per 1,000 populations as of 2018, and that's about half of the developed market. So there are still lots of room for that penetration to grow towards the level in developed markets, while the overall market is still growing. And there are some pretty interesting markets in the emerging markets that has really low penetration like India and some of the other countries in these areas that Pax is into. That's why it could provide a long runway for Pax Global in this industry. Now, the next very interesting thing about this industry is that we happen to be in a year where there are some market disruptions and derailments going on. So as we have seen just now, the top three players are Verifone, Ingenico, and Pax Global. And it turns out that two of them were actually acquired in the past 2 to 3 years. So Verifone in the US was acquired by Francisco Partners, a private equity firm, in 2018. And Ingenico was acquired by Worldline, a payments company in the acquiring field, in mid-2020. And after they were acquired, or I would say even before they were acquired, they had already been slowly shifting their focus away from hardware to either software or services. And this got accelerated once they were acquired. For Verifone's case, after the private equity firm bought them over, we have also heard news that they were cutting costs. So this could create some loss of confidence among the customers as to what your supplier would do, would they cut quality. And Ingenico, for Ingenico, they were acquired by an acquirer, which means that they are going into competition with their own customers, where Ingenico is selling the POS to acquirers. Now they are acquired by an acquirer, so you are competing with your own customers, and that's not a good thing. Imagine if you are the customers, you won't know what the supplier will do, and you won't want to buy your products from your competitor. So the customers are slowly shifting away and trying to diversify themselves away from these players. And for Ingenico's case, Ingenico has also acquired another acquirer called Bambora in 2017, which makes it even more like an acquirer. And this has actually been happening and proved in the past, where in 2018, after Verifone was acquired by Francisco Partners, right after that, within 6 months, Pax Global got a lot of active orders from existing customers of Verifone because those customers just wanted to switch their supplier. And similar things is happening for Ingenico's customers now, where Pax Global has already experienced some switching of customers from Ingenico to Pax in the first half of 2020. And all these things won't happen overnight. It will happen in a few years, but it's just so coincidental that there are such market developments going on that the competitors, the two largest competitors, are trying to not really exit, but shift their focus away from the hardware space. And this gives Pax a lot of room to go in and take on this market share from these players. Now that we have talked about the industry and probably hopefully got you a bit interested in this industry, now let's finally talk about Pax. So who is Pax? Who is Pax Global? So Pax Global basically, as we have mentioned, is engaged in the development and sales of electronic funds transfer, being EFT, POS products, and they also do a bit of maintenance and installation services. This company was founded in China in 2000, so 20 years ago. And then after 10 years of founding, they listed in Hong Kong Stock Exchange in 2010. As of last year, 2019, they have about 1,700 employees with a market cap of Hong Kong dollar 3.7 billion, so about say 500, 600 US dollars in July 2020. In 2019, they sold 11 million terminals, just to give you a sense of what's the scale, in more than 100 countries. And as we have mentioned earlier, Pax is number 3 in this space now with about 10% market share globally. And if you exclude Asia, particularly China, they have about 18.2% shares in 2018. So where does Pax actually fit in this payment chain is actually the upstream. So when you go to a shop, let's go through this value chain. You are a customer and a card holder, and you pay using your card to the merchants. And the merchant would have a relationship with the acquirer or a bank or an acquirer bank, where they handle their card transactions. Then these acquirers would actually buy the POS devices from e-payment terminals providers like Pax Global itself. And then after they got those POS, they'll sell to the merchants for them to have those devices in their shop. So if we look at Pax products, Pax has a lot of different models now. Probably one of the largest range compared to at least the two largest competitors. But we'll just talk a bit about their innovative solutions, which are the more recent solutions. So they launched the Android solutions, which are the smarter solutions compared to the traditional POS devices in late 2016. And these are really leading products in the market. They are gaining a lot of popularity. And Pax was actually the first player to start selling these Android models. And then Ingenico and Verifone followed right after that. So Pax actually has a lead there now. And then Pax also sells other ECRs, being electronic cash register solutions, which are bigger and with larger displays that can be used to replace the cashier system. Next, Pax also have some unattended solutions, those self-service kiosks. Sometimes you see in McDonald's that kiosk where you just go on and order things yourself. That could be coming from Pax, and McDonald's is using Pax now in Philippines. Next, Pax also have some software solutions. Particularly one of the strong ones is Pax Store, where it's sort of like an app store. Imagine like your app store, Google Play on your mobile phone, where you can go in and download apps. The same thing is happening for these Android smart solutions, which is why it's getting so much popularity now, where you can actually install various apps like customer loyalty app, marketing app, or whatever innovative app you have on that POS device. So it's sort of like a smart solutions now, and it's also based on Android. So as we have said, these Android products are getting popular, and Pax is one of the leaders, and is particularly popular in the developed markets now, where these models are a bit more pricier, and the developed markets focus more on quality than just on price. Currently, these Android solutions have made up about more than 25% of Pax revenues. And the good thing is because Pax has all this lead, Pax actually can charge more on these products, and these products have a higher gross profit margin than the traditional models of up to 10% depending on the model. If you have enjoyed this video, do hit the like button and remember to subscribe to our channel as we keep posting about interesting companies from time to time. Do also check out our full research series where we discuss these businesses in great detail. And you can find the clickable link in the descriptions below this video. Thank you very much for your time, and see you in our next video.